Okay, traders, so welcome back to the next pair, which is the US 100 or the Nasdaq. So as we can see, the Nasdaq is in a range. So traders, I have two ways with which I look at the markets. One is when the market is trending, I use the trend pullback, and when the market is ranging, I use the mean reversion strategy. So in this case now, the Nasdaq is in a range. How do I know that it is in a range? I can see the market got to this resistance area. Market got to this resistance, the supply area. It came down, went back up, it got there, and it came down. And there's a demand area here. So the market have not been able to break out of this supply. It has not been able to break out of this demand. That's been ranging in this box. So with this, I consider the market to be in a range. And when the market is in a range like this, I do not use the trend pullback strategy. I use the mean reversion strategy. In this strategy, I only want the market to come back to this supply area so that I can sell, or to come to this demand area so I can buy. The market is neither bullish nor bearish. I will consider this market to be bearish when it closed below this demand area. If I see the market closing below this demand area, I know, okay, the market is officially bearish. If it closes above, it continues in its bullish state. At this point now, the market is still, it's neither bullish nor bearish. So I'll look for sell from this supply and look for buy from this demand. But if you ask me what is the overall direction of the market, I'll simply go to the higher time frame. For now, let me just go to the daily time frame. If I'm looking at the daily time frame, I can see that overall the market is still bullish. See the demand area that we saw on the 4-hour time frame. See that it lined up with the daily time frame. The market is still overall bullish. On the daily time frame, we can see, even though it's consolidating at this point, the market is still overall bullish. And guys, one mistake traders do make is that when the market is consolidating like this, they start to look out for patterns. All those patterns you are looking out for, head and shoulder, double top, there are many of them. All those things are just accumulation. They are just using those patterns to confuse you. The market is accumulating. The market is in a state of accumulation. And when the market is accumulating, when the market is building up, we don't actually know what the big boys are trying to do. When the market is accumulating, when the market is building up, we don't know if they are loading positions to continue the bullish move, or if they are liquidating their positions so that the market can drop. We don't know. We don't have that information. We are retail traders. We don't have those insider informations. They know what they are doing. They know what they intend to do. We trust on the price action on the charts to give us clue. We don't know. Anybody who tells you he knows what the market is planning to do, retail traders, we don't know. I don't know what the market is planning to do. I don't know what the big boss are planning to do. I only look for clues when I come to the charts. Do you understand? So all those head and shoulder, double top, cup and handle, wedge, all those things that they taught you guys is just to confuse you. When the market is accumulating, it's either accumulating to continue or it's accumulating to reverse. When it's in a range now, I don't know. All I know is that from the higher time frame, the market is still bullish, and this market will be bullish until it closes below this demand area, this support area. If the market closes below this support area, okay, yes, now I can say that this market have changed its character to the downside. This accumulation can mean that the big boys are loading their position to continue this bullish move. It can also mean that they are liquidating their position for this market to reverse. I don't know. So, but what I can see here is that the market is in a consolidation state. So when it's like this on my 4-hour time frame, I want the market to come back to this supply area so that I can sell, or to this demand area so I can buy. So the market comes to this supply area and I get my sell entry, I'll take a sell. If it comes to this demand area, I get my buy entry, I'll take a buy. So the Nasdaq is officially on the 4-hour time frame, is in the range for me. Okay, so now how do I trade the Nasdaq as we enter into the new week? As we enter into the new week, I just want the Nasdaq to come to this demand area so I can buy, or it comes back here so I can sell. But there's something again that I see with the Nasdaq. You know, last week I told you guys that if the Nasdaq comes up here, that I will sell. I took this sell, but I told you guys I'll be very careful with the sell. But if the sell, if I see it and there are some things I will see, I will know if it's a good one for me, then I will go in. I saw it, I took it, I didn't waste much time on it. I exited at this area because I know that the main area I would have loved to sell is here, but I can try the trend pullback trade inside this point, and you can see I sold around this area. The market started to move back up. So that's why I remember I told you guys last week when I dropped the first video on the week analysis. I told you guys that if you are selling from this point, be careful. If you are selling from this point, be very, very careful, because the market is in a range. And when you are trading the ranging market, don't be greedy. Whatever the market gives you, just take and go out, because the market is not trending. It is when the market is trending you can go in and expect the market to run, you know, for some time. But the market is ranging, just take whatever the market give you. When you enter and the market moves in your favor, the next, you know, key area that you find, just exit your position and, you know, be glad, you know, for what the market have done for you. Okay, so in the coming days, what did I expect? My key, because you know, when the market gets to a supply area, when the market leaves a supply area, its next target is the demand area. If the market is ranging, if it moves from the demand area, its next target is the supply area. If it has not gotten there, whatever it's doing, it will still get there. So I can see that the Nasdaq have left this supply area at 26,184. It left here. It's supposed to come down here. Let me go to the line chart. It's supposed to come down here. This is where it's coming to. This is its destination. As long as it has not gotten here, whatever it's doing is just playing. It will still going to come here. So that is why this movement that is making now is just, this is where it's coming to. It's coming back to this demand at 23.99. Let's just say $24, $24,000. So 24,000 will be cool. 24,000 will be cool, yeah. Okay, let's keep it this way, because I can see this. I can see this resistance here. I can see this. This is a resistance. This is a support. Maybe this is a support or a fake out. I'm expecting it to come back here before going back up. Then if it eventually breaks below, I know the trend has changed. But if it gets here, if I see a buy signal, I will go long. I will go long. So what I expect the Nasdaq to do in the coming days is, I am expecting it to come down here. Because I'm expecting it to come down here, I can use my trend pullback strategy in this market here, from this point to this point. I can see the market have not gotten to 61.8, and guys, there's something else that the market likes to do. You see 61.8 Fibonacci, for some reasons which I don't know, I've back tested it for a long. I see that the market respects the 61.8 Fibonacci, and sometimes when the market is coming there, It first of all gets to, it won't get to that 61.8, it might get to 50 or thereabout and start going down. Many people will come in from there, then later it will go back to that 61.8. It will engineer people, it will deceive people as if it wants to drop from 50, but it's actually going to that 61.8. Then from that 50 it will start to drop. The early chasers, they will rush into the market. The next thing, you will go up, stop all of them out, get to that 61.8, and from there you start dropping. So exactly what I think that the market is doing. So for the Nasdaq, and you can see here there's a support here that turned to a resistance here. Price did not get there, a drop. If I'm to take a sell from the for the Nasdaq, if it gets to this area, if price, of course I see the buyers coming back in here, but though we'll have a strong bearish candle that closed, if the buyers come back in, if they get to this point and I see the sellers coming here, I will sell this Nasdaq from here, because I know it will still get down to this place. Of course I know the Nasdaq is coming down, but I cannot join this sell here. I cannot join this sell at this point. I want to see it in a pullback up, because guys, as a trend pullback trader, my main job is to sell at premium and buy at discount. Do you understand? Sell at premium, buy at discount. Very simple. Sell at premium, buy at discount. So I'll be waiting. If it gets to this zone, it's a discounted zone, from there I'll be looking for the sell signal. Then I expect it to move all the way down to this demand area, from where I'll be waiting for a buy signal. So okay, so it means we'll be looking out for two things. Sell at 25,398, stop loss at 25,621. Then you can just exit at this point, 24,645. So for Nasdaq, sell entry will be at around 25,407. Stop loss around 25,630. Then TP1, we are not using TP1 or TP2. This is a ranging market. Just use one position, whatever the market gives you, just take. You're looking at 24,664. Then for the buy entry, we're waiting for price to come down to this demand area at 23,990. So I repeat, entry for Nasdaq, entry for Nasdaq will be at 25,407, stop loss at 25,621. Then TP will be at this point, this support area here. There's a support here, strong one. It will be at this point at 24,701. Then the buy entry will be at this point, 23,990. Stop loss for the buyer can just be below here, 23,800. Then for this buy, you can use 2 TP. The first one will be at this point, 24,474. Then the TP2 will be at this supply area at 26,217. So this buy entry for Nasdaq will not be this week. Even if the market did not go up to give us a sell entry, the buy entry will not be this week. So but for now, we'll just leave it that way. If the market, so it's two things. Once the market opens, it's two things you'll be waiting for. Wait for the market to rise back to 25,407. If it gives you a sell entry, then you sell, or wait for it to come down to 23,990. If it gives you a buy entry, then you buy. Okay, let's move over to the next pair, which is the US oil. Okay, the US oil was the one, the analysis we did yesterday did not go as planned, guys. And this is one thing you need to understand, that there's no strategy that is 100% accurate in the market. If you have a start, and that's one of the problems that traders are having. When they have a strategy, they expect that strategy to work all the time. No, there's no strategy that works all the time. It's a game of probability. There's no strategy that works all the time. It is a game of probability. But the strategy you have must have a statistical edge, meaning that after a series of trades, if you execute that strategy correctly, you must be profitable. That shows that you have a good strategy. I repeat, after a series of trades, not one trade, because traders will take one trade and the trade will fail and they jump to another strategy. No, you must be able to execute that strategy for a number of trades, like 50 trades, 20 trades, 30. That is when you can say, okay, yeah, this strategy is working or it is not working. So the analysis for the US oil, it failed, and actually it failed not because it failed because the area where we were expecting to buy from, the market did not actually buy from that area. You can see that the market is still coming down. So my bias for the US oil is still bullish. I'm still bullish on the US oil because I can see that the market left this point, and the market left this point. As long as price is still trading above 58,590, the market is still bullish. I repeat, for the US oil, as long as price is still trading above 58,950, the market is still bullish. This where I'm talking about, where we'll have this horizontal line. So if I'm looking at a stronghold for the buyers, so I want to see a stronghold where I can come in to join the buyers. If I see, that they're coming strongly, I can join them. I'm looking at this area, that this area will be a good stronghold for the buyers, this zone. So I want to see, I'm looking at this zone, that this zone will be a good stronghold for them. But as long as the buyers are able to hold this support area at 58,590, the market is still bullish. Let me take Fibonacci from this line of departure and see if that my stronghold is a good one. Okay, we can see the stronghold is lining up with Fibonacci 61.8. And guys, this is what I keep telling you guys about the market. You can see what the market is doing. This area here is Fibonacci 50.8. Let me take the Fibonacci again. Swing low to swing high. Perfect. Cool. Now this area here is 61.8. 50. This area is 50 and this is 61.8. Now this is why I told you earlier that the market does. When the market is coming down to a point, this is the support area that I think the market is going to move up from. But instead of it, the market will come down there direct. It will first of all get to a level before that level and start to engineer a fake support, so that traders will be like, oh, this is where this market want to turn from. And it's not as if it's just doing it. That area is also a support area. If you can see, there's a support here, there's a support here, see support here. So it's there now, and traders will be like, oh yeah, there's a support here and this market is going to move for it. They will now start buying, and when they start buying, the market goes up a bit. As they are buying from here, their stop losses here, their stop losses are here. As it goes up a bit, it comes down and take all of them out. When they are taking all of them out, that's when it now starts going up. And that is why in trading, patience is very, very important. If you can't have patience in trading, you are going nowhere. So I will be waiting for the oil to drop down to this point, this zone. If I see the oil come down here and I get my entry signal at this point, I will go long. So as long as the market is trading above this area, 58.636, the oil is still bullish. I'm still bullish until I see price close below this area. As long as this area, this line of departure is holding, as long as the buyers are still able to defend this their attack points, this is their point of attack, this is where they launch their attack from. I told you the trading is a war between the buyers and the sellers. This is a war. So your job as a trader, you are like a war analyst. You are sitting down, you are looking at the battle, and you are looking at the battlefield, you are strategizing, because you are a mercenary commander. You are going to fight for any side that you believe has the high probability of winning this battle. So before you enter the battlefield, before you command your troops to enter the battlefield, you must be able to analyze the market, the battlefield properly, and know who is going to win among the buyers and the sellers. It is when you have analyzed the battle carefully and you've known who is going to win, that's when you deploy your troops, and you deploy the troops to fight alongside the people that you believe are going to win. Because your capital are your troops. Any of your soldiers that is down, it is your capital that has gone down. Your capital is your troop, and once you click buy or sell, you have engaged your capital, you have engaged your troops into the battle. So I will be waiting for the sellers to come to the stronghold of the buyers, where I know the buyers have an advantage to win the battle, because it's a war. This is war. This is war. This is war. This is war. You must understand that this is war. So if they come here and I get an entry confirmation, I'll go long from this point, 61,690, stop loss 60.143, TP1 65,798. the TP2 will be at this point 71.012. So for US oil, we'll be waiting for the buyers to come down to this support area at 61.646, stop loss 60.364, TP1 65.710, then TP2 70.923. So maybe the next video I will be sharing with you the importance of Fibonacci, why Fibonacci is very powerful, why Fibonacci is a powerful tool, the 50, 61.8, what makes it powerful and why it is powerful. With the next video I'll be sharing with you guys. So guys, drop me a comment, hit the like button, share and subscribe, and let me know what you think. Thank you.